This is part 2 of accounting for manufacturing cost. So we have a manufacturing company, and we have to determine the cost of producing an manufacturing item, a car, a yacht. And there are 3 costs that you have to deal with: the direct material cost, the direct labor cost, and the manufacturing overhead cost. In part 2 of accounting for manufacturing cost, we're going to look into the manufacturing overhead, which is sometimes complicated. There are 3 areas of manufacturing overhead. There's indirect materials, indirect labor, and other indirect manufacturing costs. And notice the word indirect. So in a problem that you may do, if it says indirect cost of some kind, usually referring to manufacturing overhead. And remember that all costs that are not either direct materials, direct labor, or manufacturing overhead become period cost and are other operating cost within the income statement. What I like to do is I like to teach manufacturing cost using T accounts. And in a balance sheet, so again, the balance sheet formula is assets equals liabilities plus owner's equity. When we're talking about manufacturing cost, we are talking about 3 asset accounts. They're inventory accounts. They're inventory accounts that you have to master. And that is raw materials / direct materials, the work in process inventory account, and this is in fact where the manufacturing costs of goods manufactured are accumulated, and you have to talk about the last inventory account, which is finished goods inventory. The credit of finished goods goes to an expense account, which is cost of goods sold. All right. So in the work in process inventory account, you accumulate direct materials that come out of the raw materials, direct materials are transferred, right? You have direct labor, and you have manufacturing overhead. These 3 accounts usually refer to the cost of goods manufactured, and they will be transferred over into finished goods. We're going to look at manufacturing overhead, which again is the one of 3 costs that you have to accumulate for the cost of goods manufactured. So let's look and zero in on manufacturing overhead. Now, remember is that an income statement has got the cost of goods sold. So in that cost of goods sold, coming out of a manufacturing, you have to again account for direct materials, direct labor, and manufacturing overhead. Those costs become the cost of goods sold when you run through the 3 inventory accounts. What do I mean? Here again, you transfer direct materials into the work in process. You'll transfer in direct labor cost, and you will calculate manufacturing overhead costs. That then becomes the finished goods inventory. Out of the finished goods inventory, cost of goods sold, cost of goods sold, an expense account in your income statement. And here is your income statement with the cost of goods sold. All other costs become operating expenses, selling, general administrative expenses. And again, if you then go back to the original slide here, where we're dealing with the cost of manufacturing, you got your product costs, which is direct materials, direct labor, manufacturing overhead. Manufacturing overhead accumulates usually all the indirect cost of materials, labor, and others. This will then all become, this product cost here will eventually become cost of goods sold in the income statement. All other costs right here become operating expenses in the income statement. And remember, the income statement is revenue minus cost of goods sold equals gross profit minus operating expenses equals net operating income, which is right here, net operating income. And again, direct materials, direct labor, manufacturing overhead is the manufacturing costs that go into the cost of goods sold. So let's look at the manufacturing overhead. So we're just talking about the manufacturing overhead. And you have to predetermine the manufacturing overhead rate. Predetermined manufacturing overhead rate is equal to the total estimated manufacturing overhead, which is a dollar amount, divided by the total estimated allocation base, divided by a base. And that base is usually going to be direct labor hours, machine hours, or it may be direct labor dollar amounts or machine hour dollar amounts. When the base is used to divide into the total manufacturing overhead dollars, it will become a dollar amount. And if the machine hours are used as the base into the dollar amount of manufacturing overhead, it will be a dollar amount. However, if you divide it by the total direct labor hours, it is going to become a percentage. And you will see this in a problem that we're going to do. So again, if you look into most books, you're going to see the predetermined indirect cost allocation rate. And again, I call it the predetermined manufacturing overhead rate is equal to total estimated indirect cost, or the total manufacturing overhead cost, divided by a total estimated amount of allocated base. And again, that base can usually is direct labor hours or machine hours, and sometimes it may be direct labor dollars. The predetermined manufacturing overhead rate, which you just calculated here, is then multiplied by the actual amount of allocation base used in a job. So we're talking about job costing when we're talking about in the example here of manufacturing overhead for job costing. Manufacturing overhead examples: depreciation on factory plant and equipment, factory utilities, property taxes and insurance on the factory, factory equipment and maintenance, salaries of factory janitors and supervisors. Two words that you might look for in a problem is that the factory might be called the plant. So it would be the insurance or the taxes on the plant, or the utilities on the plant, or the depreciation of the plant. It might be exchanged. Instead of factory, it would say plant. So if it refers to the plant, in most likelihood it's talking about manufacturing overhead. The other word that you want to zero in on is the word indirect. So if it's the indirect cost. The indirect cost you should think of as manufacturing overhead. Remember that first slide here where it talks about the manufacturing cost. The product costs include direct materials, direct labor, manufacturing overhead, and when talking about manufacturing overhead, we're talking about indirect materials, indirect labor, other indirect. So they use the word indirect. Okay. With that, let's move to a problem as an example to work out manufacturing overhead and how it's can change pricing. So this is a problem in the book, and it compares bid price under two different allocation bases. So it's going to use two different allocation bases to calculate predetermined manufacturing overhead. So remember, the predetermined manufacturing overhead rate is going to equal a estimated manufacturing overhead cost divided by some base, and that base usually is going to be direct labor hours or machine hours, or it might be direct labor dollars. And remember, these are going to be a dollar amounts here when these are used, and this dollar amount divided into dollar amount is going to be a percentage. So let's read the problem. The problem says that Olney recycles newspaper, cardboard, and so forth into recycling packaged materials for the coming year. Olney estimates total manufacturing overhead to be $370,000. Notice it says the estimated total manufacturing overhead is $375,000. So they're talking about this. They're talking about the estimated, the predetermined manufacturing overhead rate is usually based on a estimate. All right. It says the company managers are not sure if direct labor hours estimated to be, so it's direct labor hours are estimated to be 10,000, or machine hours estimated to be 14,800. So these are the two bases that they want to use. Either direct labor hours estimated at 10,000 or the machine hours estimated to be 14,008. So that's going to be the change in the manufacturing overhead. And remember that manufacturing cost is made up of direct materials, direct labor, and manufacturing overhead. So we're going to figure out two different manufacturing overhead rates. Okay, direct materials, direct labor should stay the same. It's just going to be the manufacturing overhead rate that's going to give us the total manufacturing cost, not to be confused with the cost of goods sold. All right. So let's go on. Only bids for jobs using a 31% markup over total manufacturing cost. So you'll have to figure out the total manufacturing cost, and then you have to apply the markup of 31% over that in order to get the bid price. After 2 new fiscal year after the new fiscal year began, Lethbridge Paper Supply asked Olney Recycle to bid on a job that will take 220 machine hours. Those are the actual hours that we will apply the rate that we get, and 650 direct labor hours to produce. And again, these are the two actual numbers that we will apply the two different rates to, depending on the base. The labor cost will be $11 per hour. So the labor cost is going to be the same, $11 per hour, and the direct materials total cost is $25. So that's the direct material cost in our costing. So they want us to compute the total job cost, bid price, and use the direct labor hours as the manufacturing overhead allocation base for. And then they want us to compare the total job cost for the company deciding to use the machine hours of the manufacturing overhead. So those are the two different manufacturing overhead rates that we will get to the total job cost. So with that, well, we will start to solve the problem. So the first thing we have to do is we have to determine the predetermined manufacturing overhead rate. And that is based on an estimate. And they estimated that the total manufacturing overhead rate would be $370,000. Right? And in this first case, in the first part, they want us to determine that using the direct labor hours. So you go back to the problem and you'll see that is 10,000 hours. So if we solve for the predetermined manufacturing overhead rate, it is $37 per hour, right? Okay, so in the first case, then we now have to calculate out the job cost, right, for the manufacturing, and we start with direct materials. Direct materials is 20. As the problem said, the problem says 25,400. 25,400, the direct materials. So the direct materials isn't going to change under either way that we determine the bid price. The next is the direct labor. And the direct labor, they tell you the actual direct labor used is going to be 1,650 hours, all right, times $11 per hour, which will then equal 18,150. And that shouldn't change under the second one. So the direct materials and the direct labor, we now have to figure out the machine, the overhead, manufacturing overhead rate, all right, under the first condition, which is using the direct labor hours. Well, the manufacturing overhead rate, we now have to look at the direct labor hours used. So it's 16,500 is the direct labor hours, right, times the overhead rate that we calculated, which was 3,000. It was the direct labor. This was the estimated. This was then the actual hours times the rate that was estimated at $37, which is going to equal 61,050. So the total manufacturing cost is going to be 104,600. So that total manufacturing cost is 104,600. We now have to calculate out the bid price. The bid price. So the bid price, we start with the job cost of 104,600, right? So that is the manufacturing cost that we just calculated, right? Manufacturing cost we just calculated. We have to then multiply that times the markup. The markup was 31%. So if we multiply that times 1 times 0.31, right, that will then give us the bid price, which is going to be $137,026. All right, then the next part of this problem is we have to figure out the predetermined manufacturing overhead rate estimated under the machine hours. Well, the estimated total manufacturing overhead rate doesn't change. It's $370,000. All right. But you go back to the problem and read it, and it says that the machine hours that they are actually going to use they estimate to use is going to be 14,800. That's what they estimate the machine hours that they're going to use, and that is then going to equal to $25 per machine hour. So we have the second predetermined overhead rate. The first one was 37 using direct labor hours, and the second one using machine hours as the base is $25. Right. So what do we have to do next? Well, next we have to calculate the total cost. So we go to the total cost. So let's calculate the total cost for this job. So again, we start with the job cost, right? And we start with the direct materials, which doesn't change, is 25,400. It's the same. And the direct labor, it's the same, which is going to be 1,650 direct labor hours times $11 is going to equal 18,150. It's the same, stays the same. So again, direct materials plus the direct labor plus the manufacturing overhead rate is going to give us the manufacturing cost. So we now have to figure out the manufacturing cost, the manufacturing overhead, okay, using the machine hours. And if you look, the machine hours that they say it was going to take is 2,200 hours, right? Machine hours times the rate that we calculated out, and here's the predetermined rate, which is $25, Remember, this was the estimated total divided by the estimated machine hours, give us the estimated rate of $25. So we multiply that times $25 and we get 50,500, which is then going to give us a total job cost for manufacturing of $94,050. So the job cost total is $94,050, we calculated, times the markup, which was 31%. So if we take this and multiply it 1.31, right, it's then going to give us 123,206 is going to be the bid price using the machine hours. So please note that under the first scenario, where we use the direct labor hours, okay, it's $37 per direct labor hour. We do the direct materials, the direct labor. These won't change under either condition. It's only the overhead, the manufacturing overhead, that changes, which is the 30 cent times the actual number of hours, direct labor hours, okay, versus here, where again the direct materials, direct labor stays the same. It's the manufacturing overhead rate, which is now $25, which was calculated here using the estimated total, which is the same as this. Okay, focus in, folks. Okay. Just focus in. I don't know why that's so funny. Fuzzy. There. All right. So the direct materials, direct labor stays the same. It's the manufacturing overhead rate that changes using the $37 versus the $25 versus machine hours, and this is the direct $37 based on the direct labor hours. And notice when we do the manufacturing overhead, in the first one we have to do the actual direct labor hours, and in the second one we use the actual machine hours. And you can see by the total, when we do the same markup under each condition, the total then changes based on that manufacturing overhead rate, and in terms of whether or not we get the bid, it can make a whole lot of difference. I hope this helps your understanding.